If you're a first home buyer, this video is going to be for you. Today, Steve and I are going to talk to Nathan Misell. Nathan Misell is an Aussie home loans broker, a franchisee of the Aussie Mount Barker, Blackwood and Palmerston store in the Northern Territory. We're going to discuss what it's like being a first home buyer, also much more about the industry.
So Nathan, for people that don't know you, tell us a bit about yourself.
I'm Nathan Misell from Aussie Home Loans in Mount Barker, Blackwood and Palmerston in the Northern Territory, ironically. But yeah, been with Aussie for 11 years, in the Adelaide Hills for the past 10 as a franchisee, predominantly in Mount Barker, and obviously played a huge role in the growth of Mount Barker and construction up there over the last period.
Beautiful. And those that don't know, so Robbie, obviously ABC on Metricon, but you two actually have a good story in terms of how Robbie started with ABC as well.
He did. I had a very young man working in my office a few years ago. It would have been probably 8 years ago now. Rob came on to support my business and had an administrative role with me for a little while there. And then through our relationship with Metricon at the time, we were able to determine that there was a career path there for him, and he's really accelerated his growth and done really well in that role over the last little while. So it's been nice to play a part in that.
Absolutely, done really well since then, Robbie.
Yeah, being your first cadet.
Exactly. So there's a bit of a theme through, isn't there? So,
A little bit.
So I think for today, really just want to understand, obviously, the market and what you do. So obviously, first-time buyers. So tell us about how you help first-time buyers get into the market.
The landscape at the moment is incredibly complex, and the government are really involving themselves heavily in that space to try and support the first-time buyers. So there's never been a more challenging time for a first-time buyer to understand what's available to them, the process, and where the incentives are to assist them in getting into the market sooner. Obviously, we do a lot of work with people like yourselves in Metricon and in the build space because there's so much stimulation and incentive from the government for the first-time buyers to build their first home.
So I've been selling in Mount Barker for 10 years. You're a Hills boy. Certainly Mount Barker, if you look at the last 10 years specifically, has really grown. And we can certainly see the popularity. We're now starting to see people come from what they call down the hill up into Mount Barker. So from your perspective, with the landscape of Mount Barker, getting into the market for first-time buyers, what would you say is the best way to start that process from them trying to understand, how do I do this?
I mean, the first thing they really need to do is sit down with someone like myself and understand what they need to do to achieve the entry point. And that can be quicker for some people than what they anticipate. Sometimes they don't really understand the kind of tips and tricks and things that are available to them through things like the First Homeowners Grant, stamp duty waiver for first construction. We can use that to fast track their journey to property ownership, which is great. And partnering up with people like yourselves, we're able to then get them in touch with the right people, give them the goals to be able to achieve in the first instance, and then send them out there to work with people like Rob and yourself to find that block of land, design their first home and get them in as quickly as possible.
Fantastic. I think, Robbie, we mentioned that one of the questions we always get is how much deposit do I need? Is that a question you get first off the bat, or do you get different questions what we get?
Yeah, I mean, it depends on the stage that we're talking about as well, right? The time to have a conversation is $0 because you don't know that determined figure for your bespoke individual positions. So that number can be different for everyone depending on where they want to be, what their level of happiness and satisfaction is with the property. And it can be quite a small amount compared to what people think. Some people think they need to go away and save $30,000, $40,000, $50,000, but something as low as 10 grand can be enough for some people with the right structure.
I think you hit the nail on the head. I think that's the sort of key, is that typically people are getting advice from other people and they hear random numbers like 10 grand, 50 grand, 100 grand. But you're right. Actually, the best time is actually when you're thinking about it or you have zero, come and speak to a broker first. Right. Because sometimes it may not be a deposit. It may be actually how much can I borrow, how much can I service for, and actually sitting with a broker, you can actually start to formulate those goals and have a plan moving forward. So that in itself can get you in the market a lot sooner than thinking you need to do X, Y, Z, realising you've gone down the wrong path.
The first thing I tell first home buyers is that once you walk through that door, forget everything you've ever been told, because I'm about to tell you what the reality is for you.
Fantastic.
A lot of them are seeing things online that may be relevant to New South Wales or Victorian rules, or they may be looking at mainstream media, which is obviously driven out of Sydney and Melbourne more so, and they don't understand the bespoke way of doing it in SA. And it doesn't necessarily get the hype and the trend online that some of the stuff out of the East Coast does. So to sit with a broker and understand it for you in your state and your position is very important.
Yeah, I think you hit the nail on the head there.
I've got a question. If someone's coming in as a first-time buyer to today's market and they walk into a bank and then go to the broker, how would you explain the difference between that?
There's all sorts of incentives that different lenders have, but you don't know as a layperson which lender can offer what. So something like the First Home Guarantee Scheme, which is the 5% deposit scheme that we have federally, not every lender can offer that. And if you walk into the incorrect bank who don't have that available to them, the deposit that that bank need you to have will be higher than another lender.
Yeah.
Sitting around all of that is we have Homestart in South Australia, which doesn't exist in any other state. I mean, there's a version of it in Western Australia called Keystart, but not necessarily exactly the same. And that's a whole nother level of lending and a whole very unique way of assessment of process. And you guys know firsthand how much we can actually use that state government-backed lender to actually fast-track people into the market. And people don't understand how that works in detail, but they can sit with us and we can guide them on that. And then they walk out of that first meeting with a really achievable goal and an achievable number.
So they've come to see you, they've got a goal, a plan, and you're like, hey guys, you can do something today. From that, what would you then say to them if you think that they can do something in today's market? What's the next sort of advice?
Yeah, it's really around them understanding what's available to them. Some people have very unrealistic expectations where they think they're going to build their first home in an inner city suburb of Adelaide, and there's some ways that can happen, but it's far less likely for a first home buyer to be able to do that, considering how fast the South Australian market's progressed in the last 5 years. It's setting realistic goals of what is achievable and then sending that person out to speak to people like yourselves, to speak to the land developers, to find out what's coming up and what's available, and then determining their plan from there, and getting in touch and starting to get a deposit down on the land, starting to get a deposit down on the build, and then using that lead time of those things becoming available to get them financially ready.
And I think that's where Aussie and Metricon and ABC have worked really well, is the ability to, if someone's coming to see you first and gathering some information, or they're coming to see us first, the ability to go, hey, you need some financial advice, we need to get some money to borrow, go and see Nathan from Aussie, and vice versa. And so that's a really good introduction into understanding how we both work and can service the client. In your experience, you've been working with us now, six, maybe 7 plus years.
7 years, yeah.
Dealing with us as a builder, what have you found some of the benefits and advantages just from a broker and managing what the banks want? How have you found Metricon's ability to help you in that space?
If I look at it purely from a selfish perspective as a broker and the ease of me doing my job, having consistency and knowing what to expect is very good with Metricon. I know that my documentation and my bank packs and the things I'm using to get that finance approval for the customer are going to be consistent. They're generally going to be very prompt compared to the average in the market. And you just don't see terribly many changes with Metricon, which is a frustration of so many people, especially when they're getting into their first property, is if the builder's changing and they're getting variations for this and the numbers are changing all the time and the timelines are changing all the time, that just creates additional stress and one of the most stressful things you're ever going to do in your life to build your first home. So having that known factor of what this is going to look like and being able to pre-position the customer for that positive outcome is very good.
You're right. They don't think about it, do they? They just think, oh, I'm going to buy the land, buy the house, and there's so much I can borrow. And they don't realise that once they've transacted that as a broker, you then need to start facilitating some stuff in terms of making those drawdowns and payments. The banks are going to have some expectations.
And it's good to know with Metricon that we're not going to get those changes, and the customer doesn't know any better. They just have a great experience end to end because we insulate them from the noise. Whereas I can say unequivocally with some other builders out there, the goalposts move through the build process, and then that creates frustration, not just for us as the broker to get the approvals, but also for the customer.
Another thing as well, first home buyers, you've got the reality of also wanting to buy something established compared to buying something new. How would you steer that conversation to go, what's the best thing for them?
Yeah, you're right, because building's not always the right thing for everyone. And for first home buyers, it generally is at the moment because of the government incentive. There's no sugarcoating the fact that the government are using the first home buyer part of the market to also generate and divide and to provide properties. So we're stimulating the building industry at the same time to be able to provide that supply because we need it. I think everyone that's watching the telly knows that we need more houses. And so that's very strategically done that way, that we are seeing first home buyers build. But sometimes it's not the right thing, and I think we're very honest with that. And if that is the case where an established property is the right way to go, we'll tell them that. And it's just a matter of, hey, this is what it looks like for you to achieve that goal. But by the way, the incentive and all the stimulation is on this build side, and it could be that you're actually significantly better off with a new home rather than an established home. But again, it's very specific to the customer's individual circumstance.
Right, building's not for everyone. I was having a conversation with a client yesterday, and the client was trying to ensure themselves every way through the step that is this fixed, was that going to happen? And it was almost a conversation, well, actually, maybe building's not going to be for you because there are a lot of unknowns in that space, and it can be, for some people, a lot of anxiety in terms of going, well, hang on, there's a lot of unknowns here. I think we do our best to control those unknowns, and that's we're established to some degree. You sort of see what you're buying. So there is a level of, I suppose, knowing what you're going to get versus having to go through that process.
Our job's to set people up for success, right? And if they need to have the keys to to the house that they're going to live in 2 months' time, then building's not the right thing to do. But I think the time is the real difference between established and construction. A construction project, and again, it's better with Metricon than it is with some others, is that the lead time's not so long, and you've got guaranteed build times, and you've got quick documentation process. Obviously, waiting for land in South Australia can be tricky, and we're always, I think both of us are in the same boat. When we're trying to find land for our customers is always a bit of a challenge. But again, it's a case of what's the right thing for the customer, what do they qualify for, and what's going to give them the right outcome.
Yeah, I think the biggest stressor in the market right now is because of the land not being available, is that what you're finding is what the finance requires and perhaps what the land developer or the seller wants for their land. Sometimes could be, for example, an unconditional land contract, which can sometimes be a bit hard to be able to understand what that means for the client. So
and I think you and I, being around as long as we have, Steve, are probably influencing that to some degree as well.
Yeah,
we're trying to coach the developers as best we can to help them support the first home buyer market as much as they can.
Absolutely. Yeah.
So I think there's continual influence from people like us that are doing this all the time and been doing it a long time to say, hey guys, this is where the opportunity is, and this is where the customers are and what the customers need. And I think we succeed sometimes. I think sometimes we do get good outcomes for our clients where we do get the right terms in the contract, or we do influence that developer or land vendor to adjust to what we need to make successful transactions for people.
No, I think you're right. There are some developers that I think really are focusing on first-time buyers and actually doing their best to ensure that a first-time buyer is prioritised as best that they can. So trying to meet what they need and want, as well as what's doing their bit for the state and economy, and as well as for first-time buyers.
And I think that's important. Right? I think it is hard. There's no sugarcoating the fact that it is harder than it has been in the past. Like I said, we can fast-track things, but it's pretty daunting, and there's a undersupply, and we'll deal with that.
I think I'm noticing a lot of not only first-time buyers, but also first-time investors in the marketplace. And what's been your experience? I know you're doing what mainly with...
Yeah, we've been around long enough that we have our client base of that whole property journey with people, and I've been doing it long enough now that I've started with people and also seen them clear their debt in the time I've worked with them. So as far as the investment market goes, look, it's definitely, everyone's got equity. So, you know, the property price growth we've seen in South Australia over the last 5 years has been double-digit year-on-year growth since COVID, effectively. So there's a lot of people with a lot of equity, and equity creates opportunity because once you've got equity in your property, you've got options. It's a case where you can access that equity to not only look at things like investment properties, upgrading your home, renovations. There's all sorts of things that come from that, but that investor market's definitely there still. And obviously there's tax incentives. I can't speak to the individual, but generally speaking, there is a really good tax benefit of building a brand new home and the things you can do with that.
Yeah. How would you explain equity to a first home buyer?
That they don't have any yet. We talk about, when we work with customers, I talk about the life cycle, and it's explaining that most customers go on a very similar journey where the first key is get in the market. So that can be saving, planning, budgeting, and all those things. We're coaching and teaching people about that. Of, hey, this is what you need to do to get into your first home. Here are the fundamentals. Here's how quickly we can do it. And then their behavior dictates how quickly they achieve that. Once they're in there, though, we are talking about equity at that point in time. So it's a case of, hey, the more you pay off your home, if you're doing things like fortnightly repayments, additional repayments, smart renovations to your home to push the value up, they're then building that kind of initial nest egg and wealth. Most Australians hold their wealth in property, or a good portion of it outside of superannuation. So we are coaching that client to go, hey, look, you're in the market. Great. The next step is we need to build equity in that property, because from that equity comes those other options. It comes the upgrade of the family home. It comes the first investment property. That the creation of that equity is really important to provide the next steps towards wealth. And then you're continuing on that journey. People are consistently either upgrading their home or going sideways into a different area. And then we hit a precipice where we start deleveraging. And there's a point where people have created their property portfolio, paid their family home off, whatever that is. And then we're talking about the run to retirement. You know, what's your retirement going to look like? When you stop working, where are you going to be? Have you paid your house off? Have you built up enough property assets behind it to really provide yourself with a comfortable retirement? And yeah, it's a long journey, but we cover it all with most customers.
It's been great. I've seen that we've sold a house and land package 5 years ago to probably a couple that was on 40 grand each, probably casual employment.
Correct.
They got in, they took the risk, they jumped, and then 5 years later they got better jobs. They just doubled their equity, and all of a sudden they're looking to build their second and invest. So seeing that journey is actually quite satisfying to actually be able to see.
And in a rising property market, there's no doubt and I think we're all pretty bullish about the market now. It seems to be pushing on, and
absolutely.
And as I said, we're undersupplied. So while there's not enough houses for the people, the price is going to continue to push on, and that means that the best time for someone to get into their first home is now.
I want to take a bit of a shift now. I think, like I said, we've been working together for a while, and the relationship between Metricon, ABC, and Aussie has been a great one in terms of supporting what we do for our clients and getting the best outcome for them. But I think in the last 12 months specifically, I think there's been some really good things happening at Aussie. So tell me some of the, which I think are probably leading the way in the marketplace, and they've really jumped forward. So what are some of the things that you guys are doing?
There's definitely a big vision in Aussie to shift the finance landscape away from one of just providing mortgages. And we've got our Find By Own campaign where we're now trying to support customers through the entire process. So, which I think we did anyway. We've just really formalised that now to be the way forward for the business. So now we're providing conveyancing services for customers to give them an in-house option as far as that goes, and keeping a really smooth and coherent process. We're buyers agents in the market now that customers can utilise to go out and find their land or find their property that they want to buy, either for owner-occupied or investment purposes. So if people are time poor, we've physically got the tools to be able to help them find the property, buy the property, and then obviously continue on that journey that we spoke about. And then Aussie Now as well, actually, you'll see on our website, if you jump on there, there's so many listings on there as well.
Okay.
So we're actually working on something called Seller Assist, where we're trying to find the best selling agent for our customers that are looking for that next move. So we'll assist them in finding the person to sell their property and get them the best outcome.
Wow.
So we've really got our fingers in every part of the pie when it comes to that property ownership journey, from initial consultation, determining what the customer can and can't do, putting them in touch with the right professionals in-house, as well as working with people like yourselves outside of the organisation, and then taking them on that whole journey all the way through.
Yeah, we spoke about last time. Your team's really important, isn't it? And it looks like you're sort of helping everyone, first-time buyers or first-time investors, gain access to that team by offering all these services, which is great. But I think it's behind that, which I've seen, is your guys' use of AI. I think in the market as brokers is probably leading the way in terms of how you're able to use AI in such a way to provide a better outcome for your clients' time as well.
We are. There's some tools in their final stages now that will actually track our customers' home loan over time, and the tools will actually make sure that their rate is in line with the market. And if they do drift out of market where they're paying too much, we'll have automatic messaging to both the broker and the customer to be able to make sure that they're kept in the best position they can be in. And the stronger position that customer's in, the further on that journey they can go.
Yeah, fantastic.
Great idea. I mean, the use of AI today is but not only in the industries we're in, you need to use it, right? You got to keep up and make sure everyone's on the same page as well at the same time, because there's so much competition out there. If you don't have someone telling you the right information today, the next person tomorrow can give you a call and you're going to change your mind on what you want to do.
I think harnessing it and utilising it for the benefit of the customer is key. So just all the things we can do to make sure that we don't need to get lucky and find that someone's paying too much. If I'm doing an annual checkup, I'm doing it annually. So the tool can be online all the time while I'm asleep, and actually tracking the things that I would have to do manually maybe once a year. It's doing it every day. So there are some good things there to come.
Fantastic. So as a broker, obviously we always watch the news and we're looking at inflation, interest rates, what's happening. So looking at 2026 as a broker, sitting down, what are you seeing in terms of where interest rates will go? What do you think, will there be any changes, I think, or major changes to how lending policy is? What's your sort of view on 26?
Yeah, lending policy is always moving at the moment. We're seeing the big banks tighten up on company and trust structures at the moment. So that's really the flavour of the week in the last fortnight. Obviously, the government want to continue to make sure they can provide credit for people to continue to get into their first home. So tightening of credit policy, it's an interesting one. They want to do it to slow down the property price increase, but at the same time, they don't want to stymie first home buyers from getting in the market. So it's a real double-edged sword, or a dual scale economy that we're working on. Look, my whole attitude towards it at the moment is we're probably in for a relatively flat environment comparative to what we've seen previously, outside of any global events that may change that. But as far as you look at the inflation data at the moment, I think we were talking about rate rises a few weeks ago. We had some good inflation data. We're now talking about interest rates holding. So it's very much driven on what that sales data looks like in inflation data, spending data, unemployment, and the RBA will make their determinations from that. But can't see anything groundbreaking happening in the next 12 months.
So really outside of global events, pretty much a stable market in terms of lending and policy and interest rates.
There's nothing you can see right now that says, hey, we're going to see a giant shift.
I think COVID changed it for everyone. You sort of
well, you can't.
once COVID,
black swan events are going to happen.
Anything's possible.
Black swan events will happen, and if they do, and when they do, the government goes into a bit of an emergency mode, and the RBA go into an emergency mode with financial policy.
I think what COVID showed us is that the government, our industry, the building industry, as well as the finance industry, with that big significant change, were very quick to act and adjust very quickly. There was obviously some turbulent times, but the industry has bounced back to some degree, so that shows the resilience in what we can do. But
we went from customer rates of 2% to 6% very quickly. We saw a 4% increase in the cash rate, and I think it shows the strength of the Australian lending landscape, where it was insulated well enough that we're assessing people at 3% above their actual repayments generally. So when we saw that rate rise, we didn't necessarily see a reduction in property price or a fire sale situation. And at the end of the day, if you look at the data, Australians pay their bills and spend the rest. And people adjust. They will make adjustments to their household budget. The family home is the most important and generally most valuable asset most people hold. Absolutely. So it's interesting to look at, but it's never as sensational as some of the things you see online would make it to be.
You're right. I think you're right. I think the government and our banking sectors and the way that we manage that, we do have more of a cautious approach. We do sort of allow for those things, and that gives you some confidence when you're going in that there is a model there that is robust, unlike what we saw, I suppose, in America. That's what happened there. So
it's hard to compare. They're very different landscapes. And obviously people should get specific advice to their own financial position as well outside of mortgage lending, but the Australian property market's pretty steadfast.
How important is getting a pre-approval?
It's an interesting question, and I probably think about this different to a lot of people, and you may or may not like my answer here. Not everyone needs a pre-approval. When we're dealing with the first home buyer space, generally, yes, they do. There's a lot of real estate agents out there now insisting on seeing a pre-approval before they'll discuss a property purchase with a customer. Now, that client could be sitting back on $1 million cash and $500,000 a year of household income, and they do not need a pre-approval. Recommended, certainly for most people, because it does take one part of the process out before you go to market. Do only have a 90 to 120 day lifespan. So a pre-approval now for a transaction that's going to happen in 12 months time is pretty futile because things can change. But for the first home buyer coming into the market, not knowing anymore, yes, a pre-approval is definitely a good idea. Effectively, the bank's going to look at you and say, hey, as far as you go, Mr. and Mrs. Customer, we've looked at your savings position, we've looked at your spending, and we've looked at your income versus your expenses. And we're comfortable that if you had a contract today, we would offer you the money. So it means that they only have to worry about the property.
Right.
Effectively, they've been signed off on their ability to borrow, but they haven't found the property that needs to be suitable to the bank yet. First home buyers, definitely. For those people out there that are very established, less important.
How would you describe Homestart to a first home buyer compared to a normal bank?
Tell you exactly what they are. Their whole mantra is to get people into home ownership sooner. And that sooner word is what they focus on. And it's exactly right. So it's lower deposit. It's slightly higher capacity, like shared equity, where they'll buy a portion of the property with the customer, which is something that's coming federally as well.
The buy scheme, I think, is out there.
Yeah, out there now, but it's not in the broker space, so we don't intimately at the moment. But we've had it in SA with Homestart for a long time. That can be the difference between someone buying a $500,000 house versus buying a $400,000 house. So that could be the difference between a slightly nicer home versus a lower quality property, or it could be an area. It could be remaining in a suburb that you've grown up in as opposed to having to move to another. That provides a great option for people. I think options are power in being able to make choices. Effectively are a great tool for people that the banks might either need more from, so they don't quite qualify yet, where they may qualify now with Homestart. Also for people that may never make it with the banks, that can either get in and or retain their property with someone like that on their side.
Any tips for first home buyers wanting to come in today's market?
In as quickly as you can, because the property market's pushing on. Haven't met anyone who's bought in a metropolitan area in Australia that's lost out over time on their first home and not been better off today than they were when they started, excluding obviously life events, and there's obviously exceptions to every rule, but generally speaking, anyone that I've helped in the first home buyer space in Mount Barker buy a house over the past 10 years is considerably financially better today than they were before they made that decision. And as long as the property price continues to push on, you cannot save at the rate the property market's moving.
Spot on,
So that dollar in your bank account today in 5 years' time versus a dollar of equity in property over 5 years' time, you're going to be better off with that property based on what we've seen over the last 5 years.
I think you're right. I think when you're looking at it, if I'm going to rent for the rest of my life or own my property, there's always going to be payments going out.
Correct.
So, and it's always going to be cheaper today. So all the grants, so by the time you factor in all the grants and what you're going to save, it seems like a bit of a no-brainer. But, but certainly sooner rather than later is always the way to go.
Yeah,
so,
I think it's
especially with your first home anyway.
If you don't own a property at all, now is the time, and when now is tomorrow, now will be the right time again.
Absolutely. So that's your tip.
Beautiful. Thanks for your time, Nathan. Appreciate it.
Great
Good stuff.
Thanks for having me.